But I'm guessing he might have held a little bit further, or he had a tighter entry, maybe with a stop loss. But nonetheless, still a great trade right there, going in the pro trend direction. This is an A plus setup here. We had a sweep. We really had all the confluences. Drawing liquidity is very clear. Gap, everything. Now here, this trade, I took a very tiny loss. This is basically a break even for me. If you were to be very specific, let's see, this is about a 25% loss. And I'm gonna go over this real quick because this is something that you guys can add to your system if you want. I find it tends to save me a lot when my trade idea is, I'm not very confident in my trade idea basically. So I said I managed essentially here very aggressively to break even after a second's internal traded character after we tapped into the OB entry model. And the reason why is because we already took out inducement, which is valid PY prior to my entry. This kind of invalidates the trade, but because this is a high time frame demand, I was willing to still risk it, right? So you see we took out inducement here, and whenever we have inducement, guys, and we have a lot of highs, look, and you guys know I use bullish candles as highs, bearish candles as lows, obviously. A bullish candle here, so this would be the high here, or this high here, or this high here. We have several highs here, and what happens is we don't always tend to run all these highs here, right? You mainly want to be looking at the high that's correlated with the PY. The PY would be this, right? Even though this is inducement, this would be like a PY you would mark out, and this would be a high. So like, for example, this here would probably be the most ideal high as inducement. So we did actually already take out inducement, and such, it makes this trade a lot lower probability, because if we already hit a potential target, price shouldn't be necessarily, in the sense if price comes back, we want to see another entry model form. Else, this could be us as catching some people call it like, I don't know exactly where some people call it in retail terms, but essentially you're just catching counter and trade at this point, right? And the thing is, if price really was bullish here, right? If price was really bullish here, we inverse this IFEG, price should not stop here and reverse down here. Instead, it should continue higher, at least to, this flip got mitigated, to at least the origin up here. But you see how aggressively it reversed. This is obviously a lower probability setup. I came into the setup knowing that's low probability, willing to risk it because, first trade of the day, whatever. And again, I managed my stop loss very nicely here, so almost a break-even trade here. Where was the internal seconds? I have a video backtesting this as an 80% plus accuracy. There's internal break structure or internal fractal candle break on the 1 minute. This correlates to usually a second's internal break structure or internal change of character. And thus, we should be holding this low here for the most part and continue higher from here if we really want to be bullish. If not, we would obviously just dump right after we just mitigated this fair value gap basically here.